Okay, so get this, right? Alphabet, which is like, Google's parent company, they're sitting on, get this, a whopping $78.8 billion revenue backlog,
Wow.
mostly from Google Cloud.
Really?
It's like they've got a whole other Google just waiting in the wings. And that's just one of the fascinating things we found digging into their latest Form 10Q.
The 10Q, yeah.
Is that quarterly report, the one that gives us a peek behind the curtain, see what's really going on with their finances.
Right.
So today, we're going deep, beyond the headlines, really trying to understand what those numbers tell us about Google's wins, their challenges, and maybe even get a glimpse into their future.
And that's the key here, isn't it? It's not just about looking back at the last quarter, but using that information to kind of chart where Google might be headed. Like, take that massive backlog we talked about. It kind of hints at a major shift towards cloud services, wouldn't you say?
Absolutely. So we're not just asking, did Google have a good quarter? It's more like, what's Google building for the future? And to understand that, we've got to break down where their money's coming from right now.
Exactly, and thankfully the Form 10Q lays it all out for us. Now, as you might expect, Google Services, that's still the big kahuna, right?
Right.
Bringing in a massive $144.3 billion in just the first 6 months of 2024.
Wow.
Think about that. That's everything from the ads you see on Google Search and YouTube to those subscriptions we all have, like YouTube TV and Google One.
It's amazing, isn't it? I mean, it really makes you think about how much of our digital lives are tied to these services. But I'm curious, what's driving that growth within Google services? Is it just the usual suspects, like good old Google search? Or are there other things at play here?
Well, search is definitely a powerhouse, especially with more and more people relying on their smartphones these days. But the real star, at least this quarter, has to be YouTube's ad revenue. Those big brand campaigns, they're really pumping money into YouTube.
Yeah, it's like the new primetime TV, right? Makes sense. But speaking of impressive growth, we've got to talk about Google Cloud. They are on a tear.
On a tear, absolutely. Their revenue has jumped by, get this, $4.4 billion in just 6 months. That's like adding a whole other, well, a mid-sized tech company to their portfolio every 6 months.
Every 6 months.
And what's fascinating is they're going head-to-head with Amazon Web Services,
The big dog.
the current cloud leader, and they're really giving them a run for their money.
It's like Google's playing 3D chess here, right?
Uh,
They're building for future dominance while still raking it in from those established services.
right.
Speaking of building for the future, we've got to talk about those other bets, those ventures that are a little more, shall we say, out there.
Out there, yeah. Alphabet's ventures into the unknown. This is where it gets really interesting. We're talking about everything from Waymo, this self-driving car project,
Right.
to Verily, their life sciences research arm. These are long-term plays, for sure.
Long game.
And they make up a smaller part of Alphabet's revenue right now. But the potential impact, huge.
It's like they're placing calculated bets on the future, hoping one of these moonshots takes off. But before we get lost in a world of driverless cars and, life-extending technology, let's bring it back down to earth for a second and unpack how Google turns all those user interactions, those clicks, those views, into cold, hard cash. We're talking about monetization.
Right. Understanding how effectively Google monetizes things like search and YouTube. So, for example, every time you click on an ad during a Google search,
Right.
that's a paid click.
Okay.
And each of those clicks has a price tag for advertisers, what we call cost per click.
So more paid clicks, generally speaking, means more revenue for Google.
Generally, yeah.
But it's not just about getting people to click, is it? It's also about how much they can charge for each click. So what are the things that influence that cost per click?
That is the million-dollar question, isn't it? Because we're talking about a whole bunch of different factors, everything from competition among advertisers to, the broader economic trends, even something as simple as what kind of device people are using. It all plays a role.
Wow.
It's fascinating.
So it's a balancing act for Google, right? Trying to squeeze as much revenue as possible from each click without scaring away advertisers with crazy prices.
Exactly. And we haven't even touched on impressions and cost per impression, which are key to understanding how the Google network's performing.
Right.
But we'll save that juicy bit for part 2 of our deep dive.
Okay, so we're back diving deeper into Alphabet's financials. And last we left off, we were talking about how Google makes money, like turning clicks and views into actual dollars. And I think you mentioned impressions.
Right, impressions. Think of them like Billboards on the internet. So every time an ad pops up on a website and that site's part of Google's network, well, that's an impression.
Okay, so it's all about visibility.
Exactly. Yeah.
But getting people to see those ads, that's just half the battle, right?
Right.
The big question is how much those impressions are worth.
You got it. And that's where it gets really tricky, the art of monetization,
Hmm.
because Google needs to keep advertisers happy, give them a chance to reach this huge audience.
Makes sense.
But they've also got to make sure those ads actually resonate with us, the users, so we click on them. Otherwise, those impressions are meaningless.
Right, so you can't just bombard people with a million ads. It has to be targeted, something they actually might be interested in.
You're getting it. It's about finding that sweet spot, right?
Right.
Where advertisers feel like they're getting their money's worth and we're not drowning in a sea of irrelevant ads.
Exactly, so it's a fine line. But you were saying that this is really important for figuring out how Google's really doing.
Oh, absolutely. Understanding this whole dynamic is essential when you're evaluating their performance. Because monetization, it's not just about revenue. It's about profitability, which brings us to the other side of the equation.
Oh, costs.
Costs. Because let's be real, Google's a massive operation.
Global giant.
Keeping those lights on, that can't be cheap.
No kidding.
But luckily, Alphabet's 10Q, it actually breaks down those costs for us. We get to see their cost of revenue and their operating expenses.
Okay, so let's start with cost of revenue. What are we talking about there?
Well, we talked about TAC, right? Traffic acquisition costs.
Right.
That's the money Google shells out to its partners to distribute their services, to show us those ads.
Right, yeah.
And then you've got your other costs, which is a pretty broad category. That covers things like employee salaries, even the cost of getting content for YouTube and Google Play.
So it's not just about, like, paying the engineers.
No, not even close.
It's the whole
The whole shebang. And then we've got our operating expenses. They're broken down into three main buckets, so to speak. You've got your research and development, or R&D.
Right, the fun stuff.
Exactly. This is where they're investing in the future. I'm talking about developing those cutting-edge AI algorithms, creating the next generation of Pixel devices. And of course, you've got to pay those brilliant engineers and researchers, but it also includes stuff like depreciation of equipment, fees for all those third-party services that support their R&D.
So it's like a never-ending cycle of trying to outdo themselves.
While he's innovating.
Pushing the boundaries, which I imagine requires a pretty hefty marketing budget too, right?
Yeah.
To get the word out about all these amazing new things.
Oh, you bet. Sales and marketing, that's another big expense for Alphabet. They've got to convince advertisers that Google's the place to be, and of course, make sure we're all using their ever-expanding lineup of products and services. So we're talking about everything here, from paying the sales teams to those flashy ad campaigns we see online, even on TV.
Yeah, it's a battle for our attention spans out there. But what about those, like, less glamorous expenses, the stuff that keeps Google running behind the scenes?
The unsung heroes. You're talking about general and administrative expenses.
Is that what it's called?
That's it. This is where you'll find the essential functions that make Alphabet tick. Finance, HR, legal, IT, support, all those things we kind of take for granted, but without them, chaos.
The glue that holds it all together.
Exactly.
But I imagine even within these cost categories, there's some interesting trends, right?
Oh, absolutely. Take stock-based compensation, for example, or SBC.
SBC.
It's pretty common in tech. Companies reward employees with company stock.
Right.
But of course, the value of that stock, it can go up and down, which can really mess with Alphabet's expenses.
It's like a hidden cost almost.
In a way.
Anything else jump out at you?
Well, we're seeing a big jump in content acquisition costs, especially for YouTube.
Yeah, they're putting out a ton of original stuff.
They are. And the demand for high-quality videos, it's through the roof. So Google spending big bucks to get those licensing deals. And then there's depreciation.
Depreciation.
Which is really just a fancy way of saying wear and tear on their assets, servers, equipment, that kind of thing. And as they keep investing in their infrastructure, we can expect depreciation to be a bigger and bigger part of their expenses.
It's amazing how these, accounting terms can actually reveal so much about a company's priorities.
It really is. It's not just about the numbers, it's the story behind them. Like, did you notice Alphabet's legal charges have actually gone down since last year?
I did notice that. What's going on there?
Well, it probably has to do with all those legal battles they've been fighting, especially around antitrust issues. Some of those cases have wrapped up, which means lower legal bills.
Okay.
But that doesn't mean Google's out of the legal hot seat just yet. Not by a long shot.
Right, especially with the tech landscape changing so quickly.
Exactly.
And with it, all the regulatory scrutiny. But I do want to circle back to those other bets for a minute. We talked about them being kind of experimental.
Right, right.
But how are they actually doing financially? Are they living up to all the hype? Are they making money? That's the billion-dollar question, isn't it?
It really is. And honestly, it's a mixed bag.
Okay.
You have to remember, a lot of these ventures, they're still babies,
Yeah.
burning through cash to fuel all that R&D.
Right, got to spend money to make money, as they say.
Exactly. But that being said, some of these other bets, they are pretty darn intriguing.
They are, like Waymo, right. I mean, they're already putting self-driving taxis on the roads in some cities.
Waymo's the perfect example of playing the long game.
For sure.
Pouring billions into this technology, attracting top talent, building those partnerships. But it's still early days.
Right.
Self-driving cars, they're still dealing with a very complex regulatory landscape, not to mention public perception.
Which is, yeah, a whole other thing.
It's huge. I mean, every other day there's a new story about a self-driving car encountering something it's never seen before.
And freaking out.
Basically. The technology is so complex, it has to be essentially perfect before it goes mainstream.
Right. People have to trust it.
Exactly. But, and this is a big but, if Waymo cracks the code, the payoff is enormous. Imagine a world without traffic accidents, where your car drops you off and finds its own parking space.
Sign me up.
Right. That's the kind of disruption that gets investors excited, even if profitability is still a few years down the road.
It's a gamble.
It is.
But I guess that's kind of Alphabet's MO, isn't it? Invest heavily in these potentially game-changing technologies and see what sticks.
Pretty much.
But I do have to say, even with all the innovation, all the diversification, they're still facing some pretty big challenges.
Oh, absolutely. Especially on the legal and regulatory front.
Right. We talked about those antitrust issues, the billions in fines from the European Commission.
Yeah, and those concerns aren't going away anytime soon. Regulators are starting to really look at big tech's power. And, Google, with search, advertising, mobile operating systems, they are right in the crosshairs.
Makes sense.
These investigations and, potential future regulations, they could force Google to make some big changes, changes that might impact their bottom line.
So it's not just about building cool tech anymore.
Nope.
It's about navigating this whole web of regulations.
And public scrutiny, yeah. It's a whole different ballgame.
It really is. But that's what I love about these deep dives.
Me too.
It's not just about understanding a financial statement. It's about, understanding the forces that are shaping the future, not just of these companies, but of, our lives.
Couldn't have said it better myself. And, by looking at Alphabet, how they're doing financially, their strategies, the wins, the losses, we get this incredible glimpse into the future, not just of one company, but of the whole tech landscape.
Exactly. So for everyone listening, what are the key takeaways here? What can we learn from Google?
Well, I think the biggest takeaway is even giants like Google, they're not invincible.
Right.
They've got to keep innovating, they've got to adapt, and they've got to play by the rules even when the rules are constantly changing.
And maybe even more importantly, remember that behind all those numbers, all those financial reports, there's a story.
There is.
A story of ambition, of innovation, and let's be honest, the relentless pursuit of, tech dominance.
It's a good story.
It is, and it's far from over.
Not even close.
So until next time, keep exploring, keep asking questions, and keep diving deep.